So let's get more on gold, where gold could be heading, and of course, if there is still some value being found in Aussie gold miners. Rob Hay from Collins Street Asset Management joins me here in studio now. Rob, nice to see you again. Thank you. So look, when you look at the broader macroeconomic environment, does this, to you, reinforce the bull case for gold?
Yes, Nadine, there's a lot to be optimistic for looking at the gold sector into 2025. Thinking about some of the more recent data that we've seen, the driver of the gold price and gold demand in recent times has really been that central bank buying. Now, traditionally, gold has been heavily bought by the Indian and Chinese consumer, jewellery and for cultural reasons. However, given where the gold price has been going, that part of demand has been coming back down. But central bank buying, off the back of geopolitical uncertainties, as you rightly say, has really been going off to the races. And equally, it's been interesting to see that ETF flows into gold have also been, for the very first time, stable and not in outflow as they were for quite some time. So that investment aspect is really starting to pick up as well.
Yeah, I'm struggling to find somebody who's bearish on the price of gold right now. But I guess what's interesting as well is that we've had so much information, so many fundamentals coming from the gold miners through reporting season through the month of February. How, in your view, and I know this is a general statement, but have they been, for lack of a better term, making hay while the sun has been shining?
That's a fair way to put it, Nadine. And it's always great as a value investor to see companies and a sector that was very unloved only a couple of years ago have its investment thesis really play out strongly. And some of the key things that struck me through reporting season were that, firstly, the all-in sustaining costs have really levelled out. The impact of inflation pushing that up, and a lot of the concerns that typically lag on gold stocks around their cost structure have come out. We've seen their cash holdings, cash and bullion on balance sheet, hit all-time record highs. I saw some broker data the other day where, if you exclude Newmont, put that to one side, they're in the multi-billion-dollar territory, the amount of cash and bullion that they're sitting on. So their ability to fund organic growth, potentially even engage in M&A activity down the track, is really quite exciting.
Were there any companies that you thought did that particularly well? Like, are you looking in sort of the bigger end mid space, or are you interested in some of those newer gold developers and producers?
We're happy to find value wherever it might present itself, Nadine. Typically for us, that would be in late stage explorers or early stage producers, because no matter how clever the people above the ground are, if you don't have that geology there to support your operations, then you don't really have the operations. Some companies, though, that stood out would be Ramelius. They've brought on board their maiden interim dividend of 3 cents per share, which was great to see, sitting on $500 million worth of cash and have EBITDA margins of over 60%. So that was really strong on that front. Catalyst, a company who have been consolidating the Plutonic region. Now, granted, they have operations in Tasmania and some exploration in Victoria as well. But the key to the business as it stands is what's going on in Western Australia and Plutonic. And they've been increasing their production. They no longer have any debt. And their profit was up over 700% for the year. Now, bear in mind, that's off a low base necessarily, because they weren't producing as much as what they are now. But where you've been able to see management successfully consolidate a region and execute on their plans to get that gold out of the ground and take advantage of the opportunity while it's there, it's very pleasing to see.
Ramelius, Catalyst, correct me if I'm wrong, but do you have a bias toward gold operators in Australia?
We tend to, yes, in that the research that we do is very much driven by the mandate of our flagship Collins Street Value Fund. That being said, we do, as part of our research into the likes of a Catalyst or Ramelius or a Black Cat Syndicate, we do look at international peers so that we can get a really good handle of what best practice is for different stages of mine life. And certainly, Nadine, the directors will be operating in a global game as well. And they may have insights or experience somewhere else where we have to do a bit more digging.
You mentioned Black Cat Syndicate. Is that another holding?
That's one that we've been invested in for some time, and they've been kicking enormous goals. their Paulson's operations are producing at a high grade, and more recently during February, and not as part of a traditional half-year report as such, but it was announced that they had acquired some additional processing facilities from Westgold. And so this brings forward their production plans by a good 15 months. And so capitalising on that gold price is an even greater proposition for them here and now. And so that will only fall through to the bottom line, and no doubt market enthusiasm will follow.
Okay, so for those, let's just take those three companies in particular. So that was Ramelius, Catalyst, and Black Cat Syndicate. Do you see further upside from here?
Absolutely. As those companies with strong balance sheets and good organic growth opportunities around their existing mine sites continue to build out their inventories, that will build a lot more longevity to their operations and give them a lot more flexibility. Companies like Black Cat, certainly, who are in the infancy of their production journey, have a long way to go, and as those numbers become a lot more real and tangible and recognised by the market, then the discount the market applies to that would be less. Mm-hmm. But there are other companies as well, like your Great Boulder Resources, who've got about 670,000 ounces at the moment, targeting 1.5 million, in a wonderful jurisdiction surrounded by a lot of big players, where M&A activity could also be a very real proposition.
Yeah, I know you're keeping an eye on M&A for some of your high conviction ideas, Rob. So there's nothing that you can see right now that would upset the apple cart. So your gold trades are still on.
We're absolutely backing the gold trade into 25, Nadine. It would be wrong of me to suggest things can't go wrong and there can't be blips along the way. Whenever you're dealing with companies, you're dealing with people, and that adds a level of complexity and discounting that you don't necessarily find in the spot market for the bullion. You have the natural risks that you would find in states like Western Australia, where a lot of our companies are based, where cyclones can impact production, and that can certainly take some time to go through. And of course, boots on the ground, having people there also can have its challenges from time to time, particularly if the competition for talent heats up at different parts of the cycle. But these are first world problems, certainly on the employment side to have. Natural disasters and the sort are very sad, but an inevitable part of the operations. But at a headline level, Nadine, we're excited for what 2025 will bring.